Chapter number 76. Now this topic is going to be a very important topic for your exam. A small topic, but a very critical topic for your exams. Okay. Because this is absolutely a new topic which is inserted by the institute in your new syllabus. Okay. This is a new syllabus topic. Is it clear? Now pay attention, please. What is the objective of this topic? Let me give you an example first of all. Now in 2014, when the government of India was elected, they have made a promise that we will bring what? What promise they made?
They made no black money, no black money.
We will bring the black money back to India.
Swiss accounts.
Okay. So for that purpose, they made an SIT also, special investigation team. And that SIT recommended that make a separate law. Make a separate law for what?
Black money.
Black money. Why don't you make a separate law for what? Black money. Okay.
Black money.
Now pay attention, please, all of you. So by listening to that, the Government of India in Finance Act 2015 made a separate law by the name called as Black Money Law. Okay. So the name of this law is Black Money and Imposition of Tax Act 2015. This is the name of the law. Okay. What is the name of the law? Black Money and Imposition of Tax Act 2015. Are you clear?
Clear.
So this is the name of the law. Now, every law, every taxation law should have a charging section. Correct or not? So we need to understand the charging section over here. Okay.
Okay,
Now, at some places, I will also be using the ICI material to explain you certain things. Okay. So let me open the ICI material as well, which will be useful for us at some places. So if you come to page number 19.44 of ICI material, you will find black money law over here. Okay. Shall I read the overview? The intro? The intro is as follows. Pay attention. The Black Money Law and Imposition of Tax Act 2015 passed on 26th of May 2015 provides for stringent taxation of any undisclosed income in relation to foreign income and assets. This new law has been formulated to act as a strong deterrent. Deterrent means it will discourage people to evade tax, okay, and curb the menace of black money stashed away abroad by the Indian. This law is effective from AY 1617 unless otherwise provided in any section and extends to the whole of India. Is it clear? Now, we need to talk about first of all the charging section. We will be switching from here to there again and again wherever it is required. Okay. Now, the charging section. See here. It's a very, very important law. It's a slightly tricky law. First page, second page, third page, fourth page, slightly tricky. Fifth page onwards, very simple. Nothing great. Okay. Hardly it is 7-page topic. Nothing great. Okay. We'll complete tomorrow. There are some questions also we'll see tomorrow. Okay. Now the very first thing that I would like to tell you all is, pay attention please all of you. What is the tax rate over here? First thing we need to understand. The tax rate under the black money law is 30%. How much it is?
30%.
30%. Every assessee would be liable to what? 30%. Now you will ask me, what do I mean by the term? What?
Every
Assessee. Assessee means what, sir? What do I mean by the term assessee, sir? Listen carefully. This is not an income tax law. This is a separate law you are learning. Yes or no? Separate law will have its own definition or not? Tell me please. A separate law will have its own definition. Everything will be of its own. Correct or not? So every assessee would be liable to tax at the rate of what? 30%. So assessee means what? Let's see the definition of assessee below. Shall we? Let's see. Assessee is a person resident in India. Is a? As per section 6 of the Income Tax Act in the previous year. Okay? So you have to refer what? You have to refer what? The section 6, whatever we have done in the section 6 of Income Tax Act. Yes or no? So we are aware of the provisions of the residential status or not? Tell me. We have done residential status or not earlier? So whatever we have done, that you have to apply here to find out the residential status. Okay. So if you are what? If you are a resident, then you are an assessee. Okay. Second, if you are a non-resident, if you are a
non-resident
or if you are a not ordinary resident, which resident?
not ordinary resident
In the previous year. In the previous year. Currently you are what? Currently you are what? Non-resident. Or you are a not ordinary resident.
not ordinary
No. Again I am saying, listen carefully. Don't, even for a single second, don't be here and there. The chapter will go out of your mind. You are learning a new topic, new subject. It's a new subject, okay? Who is an assessee?
a resident in India.
Yes, you are a resident in India in previous year. So you are assessee, okay? If you are or not ordinary resident in previous year. So currently you are what? So current, as per point number 2, currently you are what? Non-resident or not ordinary resident. But who was resident? Who was resident in India either in the previous year into which undisclosed income relates, or the previous year in which undisclosed asset located outside India was acquired. Listen carefully now. Listen carefully. Very dangerous law. Very dangerous law. Very dangerous law. Listen carefully. So what does point number 1 says that? Point number 1 says what? You are resident in India today. Today you are resident in 23-24. Okay. Then you are an assessee. Then you are an assessee. Point number 2. Today you are non-resident. Today you are, or you are not ordinary. But when you acquired that income, when you acquired that asset, undisclosed income, okay, say this, the officer has caught you that you have an undisclosed income of 2016-17, okay, and you have admitted the fact that yes, in 16-17 I have an undisclosed income outside India. At that time you were resident. At that time, today you are, still you are an assessee. Check. Did you understand? Tell me honestly, did you understand? So today, as per point number 2, today you are what? But the year in which you have hid the income, in that year you are what? Then you are also assessee. Are you clear? Coming back to the original charging section. Every assessee would be, tell me, liable to tax at 30% rate. So under this law, there is a flat 30% tax rate. No slab rate, no surcharge, no cess. Write down over there if you want. There is no surcharge, there is no cess, nothing else is there on this. Shall I go ahead? Shall I go ahead? Every assessee would be liable to tax at 30%. In respect of his what? Listen carefully now. Listen carefully. Don't repeat. Listen. In respect of its undisclosed foreign income and asset. In respect of its what?
Foreign income and asset.
Undisclosed foreign income and asset. You will ask me, what is undisclosed foreign income and asset? You will ask me or not? Tell me. You will ask me now, what is the meaning of this phrase, undisclosed foreign income and asset? Please tell me. So let's come below. Definition of important terms. Shall I? See, the first definition over here is what? Undisclosed. When can I say that? My income and my asset are undisclosed. When can I say? Now listen carefully. Having a foreign income is not wrong. Having an asset in foreign country is not wrong. Correct, na? There's nothing wrong in having a foreign asset. Agree or not? Are they agreed or not? There's nothing wrong in having a foreign income. Agreed or not? It should not be undisclosed. It should? In short, it should be disclosed. Correct or not? So now it means, what do I mean by the phrase undisclosed foreign income and asset? It means total amount of undisclosed income of assessee. Okay? From a source. From a located outside India. It means you have a property in Singapore and you had a rental income from there. Can I say, if you do not show that rental income in India, then it is an undisclosed foreign income? Tell me please fast. Or if you do not disclose that property in ITR, can I say you have an undisclosed asset outside India? Yes. We are not talking about Indian assets. We are not talking about Indian income. We are talking about foreign assets and foreign income. Any kind of foreign income. It can be rental income, it can be business income, it can be dividend income, it can be interest income. Yes or no? Any kind of foreign assets. It can be property outside India, it can be shares outside India, it can be debentures outside India, bonds outside India. You have to disclose in the ITR. You have to disclose in the income tax returns all these things. If you do not disclose, you are at sin, you are wrong. You will be punished. Yes or no? Tell me please. So what do I mean by the phrase undisclosed? Undisclosed foreign income and undisclosed asset. There are two things on which the government is charging. The charge over here is on two items. The charge is on two things. First of all, you have to understand that in today's lecture. The charge is on two things. The first charge is on foreign income. If it is undisclosed. And the second charge is on foreign asset. If it is undisclosed. Are you able to understand? There is a difference between these two things. If you have a property in Singapore, okay, you are earning some rental out of it. You have not shown that rental income in India and you have not paid tax on that rent. That is undisclosed foreign income. Is it clear? And if you have not shown that asset in the ITR, if you have
Not shown that asset.
that is undisclosed asset. On that also 30% income tax will be charged. So not showing the income, the income will be subject to tax. not disclosing the asset, the asset's value will also be subject to tax. Are you able to understand or not what I'm trying to say? There are two charges. The charge is not only on income, the charge is also on asset. Are you clear what I said? So for that purpose, you have to make two valuation. One is you have to compute income. And for asset, you have to value asset. Yes or no? The charge under black money law is on two items. BML charges how many items? Black money law. One is on undisclosed income. Another is on in undisclosed assets. Obviously, both of them are what? Foreign. So for income, the law has to give us what? And for asset, the law has to give us what? Valuation mechanism, valuation rules. Are you able to understand? 100% clear till here? So let's come to the main charging section. Let us read once again. What is written in the charging section? Every would be liable to tax at what? In respect of his what? Here also write first. Here also write second. Now, the first question which very important over here is when will, or rather in which year, see, listen to me, in which year the undisclosed foreign income and foreign asset shall be charged to tax. Okay. Shall I say? Suppose on 15th of June 2023, AO comes to know that Mr. A has a house property in London. Okay. Since previous year 15-16, from which he earned rental income. Okay. Every year since previous year 15-16. Okay. Is it clear? Now, what does the law says? See, listen to me. This person will be liable for black money law because he has not disclosed. Okay? He has not disclosed. He has not disclosed both income and the asset. So listen what we are trying to resolve. We are trying to resolve in which year the income will be taxed and in which year the asset will be taxed. Okay. So the law says that income and asset. The law says income will be taxed in respective years. What do I mean by this? In which year income will be taxed? Rental income will be taxed in which year? In 15, 16, 16, 17, 17, 18, 18, 19, 19, 20, 21, 21, 21, 22, 22, 23, correct? Now, what about the asset? When will the asset be charged? Okay, even the asset will be subject to 30% tax, na? Tell me. So the law says that asset will be taxed in the year in which AO found it. So in which year AO found the asset? Yes. So the asset will be charged in which year? But the income will be charged in every year from 15-16 to say 23-24 respectively. It will be classified as income of respective years. Did you understand what I said? Or did you understand what I said? So if today the AO finds that you have escaped some income in 15-16, so in which year it will be charged? 15-16 only. If today the AO will find that you have escaped some asset from last 20 years and he comes to know today, when he will charge the asset? Today. Is this 100% clear? So take a photograph of this, please. You have to write down this, please. You have to write it down later on, please. You make it in a proper note, otherwise you will not understand all these things properly. Is it clear? This is the first important concept for today's lecture. Come to the charging section once again. What does the charging section says? Every SSE would be liable to tax how much?
30%.
On what? On how many things? On how many? Just think fast now. On how many things? Undisclosed foreign income, undisclosed foreign asset. Correct? Now, undisclosed asset located outside India shall be charged. Shall be? In which year? In the year in which the AO comes to the notice of the AO. Correct? Absolutely correct. Till here everything is crystal clear. So, is the rate of tax clear? The tax is charged on what item? It is clear. The tax is charged in which year it is cleared? Perfect. If this is clear, then the introduction is clear. Don't worry. Okay. Now coming back to the definition of what? Coming back to the first definition here. What is the first definition? Undisclosed foreign
income
and asset. Okay. Now listen carefully to me. It means total amount of undisclosed income of the assessee from which source? From Delhi, from Punjab, from Tamil Nadu, from Chennai, from Andaman Nicobar. Tell me. No, all those incomes we are not interested in this law. For that there is a taxation law, income tax law. Correct or not? From a source located outside India. And the value of what? Located outside India. Now when can I say that the assets are what? What do I mean by this phrase? Okay. Okay. Which phrase?
undisclosed asset located outside India.
See, the definition of this is given in the next line. Shall I read? So when can, you might have lot of assets outside India. Yes or no, Palani?
Yes, sir.
So when can I say that the assets which are outside India are undisclosed? There has to be some definition of that, na? Correct?
Yes, sir.
An asset including a financial interest in any entity located outside India, held by the assessee in his name or in respect of which he is a beneficial owner, and no explanation about the source of investment in such asset, or the explanation given by him is in the opinion of the AO not satisfactory. Listen. What do I mean by this? Circle this. No explanation about the source. Say you have an asset outside India. Okay. You have bought a property in Singapore. Now officer is asking you from where you have got the money. So you are not able to explain the source of that investment. Okay.
Yes, sir.
Okay. Now, as I've told you at the beginning, there is no harm in buying any asset outside India if you have what? Proper source. So if you are a owner of a asset which is outside India, and if the officer asks you from where you have got the money to buy this asset, and if you are not able to explain that, or even if you are explaining, your explanation is not satisfactory, okay, you are giving what, some lame kind of excuses. Your explanation is not valid. It's not within the law, okay. The officer is not able to digest your explanation. So in that case, what will happen? That asset will be called as what? Undisclosed asset, and 30% tax will be charged on that. Are you clear?
Yes, sir.
Tell me please.
Yes,
And one last thing over here is the definition of previous year, which is almost same like income tax only. You can write down over here, so don't waste time. Don't waste time. We have done that under the income tax law. Do you remember that? That by default, a previous year is of 12 months, right? Starting from 1st April, right? A previous year is a 12-month period starting from 1st April. But if the business is started in the middle of the year, okay,
yes, sir.
then your previous year will also start from middle of the year, correct or not? Tell me.
Sir. Yes, sir.
So that is what it has been given over here. Nothing great as such, okay? Now listen carefully. See here. See here, see here, see here. The charge under black money law, the is on two things. Is on. That is the reason I like Palani. You are a very, very interactive person. Right, Palani? So, see here. What are the two things on which there is a charge? The first is on income. The second is on
Asset.
asset. For income, what we are supposed to do? Compute.
Computer.
And for asset, what we are supposed to do? So, first of all, we will learn the asset valuation. Okay?
Yes, sir.
Shall we start?
Yes, sir.
So, in case of undisclosed asset, how are we going to value? Okay. So, the valuation is given under section 3, subsection 2. Where it is given? And under section 3, subsection 2, they have prescribed certain rules. What they have prescribed?
Certain rules.
I'll just show you from here. See, the valuation of undisclosed asset. Which section?
3 subsection 2.
And in that, they have prescribed rule 3. Can you check that?
Rule 3.
Is it clear?
Yes, sir.
Now, let's see, they have categorized all the assets into multiple category. Point number 1, 2, asset number 1, asset number 2, asset number 3, then asset number 4, asset number 5, asset number 6, asset number 7. Okay? And then asset number 8. In all, how many categories are there of asset? Tell me. Tell me now.
8 categories.
It's very simple. Most of them are similar to each other. Shall I start with the first one? So now, how to value? First of all, bullion. If you have undisclosed bullion, okay? Where? In Chandigarh? Outside India. You have to keep that thing in mind always, correct? So if you have bullion, jewelry, precious stone, artistic work, archaeological collection, drawing, painting, sculpture, any other work of art, okay? Is it clear? Tell me.
Yes, sir.
So how will you value? The value will be higher of the cost at which you bought or the net realizable value, whichever is higher, okay? The cost or NRV, whichever is higher, NRV on valuation date. Now you will ask me, what do I mean by? Valuation date is nothing but by default 1st April. Okay. What is valuation date? By default 1st April. Don't worry. Okay.
Sir.
So in whichever year you are charging, first of all, I would like to ask you one question. In which year the asset will be charged? In the year in which AO finds. Okay. And whichever year AO finds, you have to take the value of the 1st April of that year. Okay. Understood? In my example, it will be mostly 1/4/2023 only. Correct? Acha, valuation, you have to get it done from some expert, na? Correct? So, where is that expert? In India or outside India? Are the asset, where is the asset?
The other is
So where will be the expert?
The value should be outside here, sir.
Outside India only, na? Check. For this purpose, the assessee may obtain valuation report. Okay?
Sir,
From home,
from
recognized by foreign government. Are you clear? Is it 100% clear? Tell me. So how many, which all assets are covered in point number 1? Generally, you can say personal effects. Yes. Bullion, jewelry, precious stone, artistic work, archaeological collection, drawing, painting, sculpture. Cost or market value, whichever is higher. Correct? Net realizable value. Now, suppose you have quoted shares. You have bought shares of Apple, but you have not disclosed. Should you disclose? Yes, in ITR I have to disclose. So then you have to consider the cost of acquisition, compare with average of the lowest and the highest price on valuation date. Okay. What you are supposed to take? Average of the lowest and the highest price on which date? Valuation date. But where, which price? In BSC? In NSC? You have to consider the established security market. Obviously, it has to be outside India, na? Yes or no? So you will ask me, what do I mean by the term? So the established security market is defined over here. Check. On page number 776.5. Come. Not very relevant to remember all these things, please. Now we cannot remember all these definitions, na? Established security market and all. This though they used to not ask in even paper 6 earlier, in elective paper. They used to ask you some straightforward questions. But still we'll see once. Established security market, shall I say? An exchange that is officially recognized and supervised by the government entity in which market is located and that has a meaningful annual value of shares traded on exchange. So it is nothing but a market which is recognized by what? Say, it is a market, say NASDAQ, which is recognized by what? Government entity in US, correct? Plus, it should also have what? Meaningful annual value of shares traded. Okay. It means the stock exchange should not be a very small kind of stock exchange. Okay. There has to be some significant trading in that particular stock exchange. That is also defined in point number 2 over here. Check. With respect to what is the meaning of the term meaningful annual value of shares traded on exchange? Can you see that? With respect to an exchange, it means it has an annual value of shares traded on the exchange or predecessor exchange exceeding 1 billion US dollar. Check. During each of the 3 calendar years immediately preceding the calendar year in which the determination is being made. So when are we determining? We are determining in 23-24. So see here. We have to take average. See, think like this. The AO found that I haven't shares of Apple. Okay. So he has to compute the highest and the lowest price on 1st April 2023. So from where he will get the price? He will get the price from such a stock market. From such a stock market where last 3 years trading should be at least greater than $1 billion. Are you clear? Then only it can be called as what? Established security market. Are you clear? Sure? Come. Sir, what if on 1st April 2023 there is no trading? Is it possible? On 1st April 2023 there is no trading on that particular date of that share. Clear? Then you have to go to the preceding date. Check. Go to 31st March. Sir, 31st March also no trading. 30th March, 29th March, 28th March. Someday it would have been traded, na? Otherwise, from where it has come? It has come from Sky or what? The shares. You would have bought na from somewhere. Yes or no? So trading would have happened on some or the other day. Are you clear? So how many assets we have covered so far? 2 assets. First one was personal effect. Second one is listed shares and securities. Okay. Even bonds and debentures, etc. will also come if it is what?
Listed.
So for personal effect, how will you value?
Cost of acquisition NRV on the value date.
NRV on valuation date means what?
The year in which the AO found the first April.
1st April of the relevant year. Okay. And the average of the highest and lowest price for quoted shares and security on which date you will take? Again on valuation date 1st April. Okay. Now third, this is a very dangerous point, but this is something which we have done earlier exactly. Okay, you will come to know where we have done. Just 2-3 days back in exit tax. Do you remember in exit tax we have done the valuation of unquoted shares? There we have done the unquoted shares valuation. Do you remember? So same calculation is over here. Same. It is exactly copy paste. I'll just make you read. Unquoted shares you have to take higher of cost or this value. What is this? A plus B minus L. Do you remember? There also it was A plus B minus L exit tax. Don't remember? It's okay if you don't remember. I'll tell. Don't worry. But once I read now, you'll come to know. So suppose you have bought what? Unquoted equity shares in a foreign company. Okay. But you have not disclosed that. Okay. So cost or this value. This is market value. Whichever is higher. Now how to determine market value? Check. A plus B minus L divided by PE into PV. Now what is A? Come below. What is? A includes book value of all assets. Other than B. Other than B items. But that will exclude TDS advance tax. Do you remember that? And that will also exclude deferred revenue expenditure. Okay. That is fictitious assets. Okay. So what is B? B will include FMV of book, bullion, jewelry, precious stone, artistic work, shares, security, immovable property. Do you remember as per this rule, there also we have done this also, this only in exit tax. As per this rule, we have to compute. Yes. So what will A include? Tell me, give me some examples. What will come in A? Debtors will come. Excellent. Then cash will come. Bank will come. Correct. Land building will come in B. Immovable property is there na in B. Okay. Stocks will come. Shares and securities will come. All these things will come in A. Correct. So they have divided all the assets into how many category? Two category. One, you have to take book value of all assets, and for certain assets, you have to take FMV. Correct? As per this rule. Then from that, you will reduce the liability. Correct? So what is liability, sir? Book value of all liabilities you are supposed to take. What you are supposed to take? But not including certain things like paid up capital will not be part of it. Right? Paid up capital will not be part of liability. Amount set apart for dividend will not be part of liability. Reserves and surplus will not be. But other than those set apart towards depreciation, this will be part of liability. Do you remember that? Same points were there over there. Provision for tax will not be part of liability. Unascertained liability will not be part of liability. Contingent liability will not be part of liability. But other than, it means arrears of dividend in respect of cumulative preference shares will be part of liability. Because it is other than. If it is other than, then you have to include, correct or not? Now this is exactly similar to exit tax. Just open exit tax once if you want. Check over there. Yes. And then A plus B minus L, then you will multiply by what? PV means paid up value of one share, correct? And divided by total equity capital, paid up equity. 5 crore, 10 crore, 20 crore, whatever it is. Okay. So this is how you will value what? Tell me. Unquoted equity shares. So how many category of assets are over? What was the first? Personal effects, bullion, jewelry. For personal effects, what will you do? Cost or NRV, whichever is higher. Okay. Then for what was the second one? Listed shares and securities. For that, you will take cost or Average average price on 1st April, correct? And then unquoted equity shares. Okay. Now, just go through the second and the third point once again. The heading. Second point covers quoted shares and securities. Okay. Third point cover only unquoted equity share. Correct? Now come to the fourth point. Come fast. Fourth point. Okay. Shall I read? Fourth covers unquoted shares and securities. So what will come here? Please tell me. Can you give me example? You can say preference shares come. Or debentures can come, which are unquoted. Okay. So the rule is very simple. The cost or NRV on 1st April, whichever is higher. Is it clear? Is it clear? Now, fifth point, immovable property also same. Cost or NRV, whichever is higher. Okay. Please don't use the word stamp duty value in black money law. Please. The concept of stamp duty value is applicable in India, not in foreign country. Please. Yes or no? Here you have to compare your cost with what? NRV only, whichever is higher. Is it clear? So how many items are done now? 5 items are done. Listen here, see. Wait, step by step, wait. Have patience. Now, when this particular law came, this law came from 1st July 2015. Okay? Okay. This law is effective from 2015. Black money law 2015 it is. Okay? Now listen carefully. When it would have been announced? When it would have been announced? Tell me.
In the elections 2014.
No. That was just an election announcement. Official announcement. 2014 was just an election announcement. Yes, we will bring black money law. That political party announced a lot of things. Okay, don't take everything seriously.
26th May 2015, sir.
No, 26 May 2015, the law was passed. The law was passed on 26 May 2015 and it became effective from 1st July 2015. Obviously, it was announced, Palani, on budget date now. Palani. On budget date, it would have been announced now, correct or not? Please tell me. So, on 1st Feb 2015, they have announced. Okay?
Okay, sir.
Now, when they announced now, they gave an option. They gave
An option.
that all those people who have undisclosed black money and undisclosed asset, come and
Disclose your income.
come and declare. Okay?
Declare. Yes, sir.
So, is it possible that many people would have come and declared? Some people would have come and declared at least. So, all those who have come and declared, for them the valuation date was 1st July 2015. What was the valuation date? 15. So, when all those who declared in that year, all those who page number 76.4. Now, see the definition of valuation date. Valuation date for valuation of asset and conversion into Indian currency. If an asset declared under section 59, okay, then it is, what is the valuation date? Now, is this point relevant for us in today's time?
No, sir.
It's not relevant. It was just a transition provision. Yes? For us, what is relevant? Is it clear, all of you? Now, coming back to the valuation. How many assets we have valued so far? 5 assets. Let's talk about the next asset, the 6th one. Shall I say? The 6th one is a very different kind of asset. That is a bank account. What? Undisclosed bank account. Okay. The rule is very simple. For undisclosed bank account, this is the credit side of bank account. This is the debit side of bank account. Okay. This is your bank account, Palani. This is credit side. This is debit side. Suppose you open this bank account on 1st of April 2017. Okay. Opened. On that date, you deposited $10,000. Okay.
Okay, sir.
After that, you might have deposited lot of money over here. Correct?
Yes, sir.
Over the years. Yes or no?
Yes, sir.
Now, what is your duty? Your duty is to disclose that bank account in the Now you are not disclosing. Okay. So will this become an undisclosed foreign asset or not? Please tell me.
Yes, sir.
So the law, how to value this? How to? It would be a difficult task, not to value this. It is easier to value bullion, jewelry, painting, immovable property, shares, security, right?
Yes, sir.
But how will you value a bank account? If I tell you, Palani, value your saving bank account, how will you value saving bank account?
Closing balance.
Huh? No. How will you value? It's not that easy. See what the law says. Very dangerous. Very,
Bank
very
dangerous.
dangerous provision. See, bank account, how will you value? The sum of all deposit made since the date of opening the account. Check. So since the date of opening the account till today, whatever amount you have, what? Deposited, credited in the bank. You have to consider that as what? As your value. Let's read ahead. Or where the such account is already declared earlier. Tax penalty paid. The sum of all deposit made since the date of such declaration. Okay. So if you have declared earlier, okay. Earlier you have declared and you have paid the tax and all. And then you have stopped declaring. Then you have Then, till the date of declaration, so you cannot pay penalty and tax once again, na? Say you opened the account in 2010, okay? And in 2017, you were caught. So, from 2010 to 17, have you paid the tax or not on the deposits? Now, again in 2018, you stop disclosing the account,
Yes, sir.
okay?
Yes, sir.
So, from now, your value will start from where? 2018. Are you clear? Now, listen carefully. One more point is very important over here. Suppose I deposited $10 lakh here. Okay? Okay. Then on 15th April 2017, I withdrawn. $2 lakh. Okay? Now, after withdrawing this, I again deposited this $2 lakh on 15th of May 2017. Is it possible? Now, if I take the total of this, it will come to 12 lakhs, correct? But out of this 12 lakhs, can I say this 2 lakhs is from this only? Yes or no? So it will lead to duplication of tax or not? So the law says that if you have deposited from withdrawing the money and you have redeposited it, that much you have to reduce. Are you clear? Are you clear? Check the last line. We are going to see questions on all of them, don't worry. Okay. Is it clear? So how will you value a bank account? Tell me.
The sum of
All deposit from the date of opening. Now, if you have withdrawn something from your deposit, then you have redeposit, withdrawn, redeposited, then reduce that much amount. Okay. Now, the next asset. I am Mr. A. I am resident. And I am a partner in a firm in Dubai. Shall I disclose that in the asset or not? In the ITR, that I am a partner in a firm.
interest.
Yes, I have an interest in foreign entity. Shall I disclose that in the ITR or not?
Yes, sir.
I fail to disclose. Will it be considered as a undisclosed foreign asset or not?
No, sir.
I fail to disclose, then will it be considered as an undisclosed foreign asset or not?
No, sir.
Why?
Partner, partner.
You are a partner in a partnership firm. Are you supposed first you say yes, then you say no? You are contradicting to your own point here. Listen to me carefully here. You are a partner in a foreign firm. Being a partner in a foreign firm is also is your asset or not? Are it is as good as buying shares of a company, yaar. Should you disclose that or not? That you are a partner in a foreign firm? And you are not disclosed that. Is this undisclosed foreign asset or not? Now, how will you value this? How will you? How will you value this? Check. For that, you have to value as per point number 7. Shall I say? Shall I say or not?
Yes, sir.
How will you value? Value of what?
Interest
In the firm LLP, AOP, BOI. You have to find the net worth of the firm. What you are supposed to find out?
worth of the firm.
The net worth will be found as per A plus B minus L. Do you remember A plus B minus L for unquoted shares? Yes, same way. Okay. Now, suppose the net worth of the firm comes to how much? Suppose, let's take an example and understand. It comes to how much?
50 lakhs.
Now, first you have to divide this. First, this 50 lakhs is to be apportioned to all the partners in their capital account ratio. In which ratio? So, suppose Mr. X has a capital of 12 lakhs, Mr. Y has a capital of 5 lakhs, and Mr. Z has a capital of 3 lakhs. First of all, allocate in the ratio of what? Tell me. Capital account. So, Mr. X will get how much? 12 lakhs. Don't take calculator, yeah. Directly say without taking calculator. You have to just repeat what is written on the board. Listen to me once again. I am one of the partner in that firm. Okay. So what is the first thing that I am going to do? I will compute the net worth of that firm. Okay. How will I compute the net worth of that firm?
A plus B minus L.
I got the answer 50 lakhs. Okay. Now that is the total value of the firm, not my value. That is the total value of the firm, not my alone. So first of all, you have to find out the partner capital. What you have to find out? Partner capital is 12 lakh, 5 lakh, 3 lakh. 12 lakh, 5 lakh, 3 lakh. See on the board. So allocate on the basis of partner capital. Allocated, how much you have allocated on the basis of partner capital? How much? 20 lakhs. What is the remaining amount? Now the remaining balance, see here, balance net worth in the dissolution ratio or profit sharing ratio in the absence of dissolution ratio. So the balance net worth, balance is how much in my example? Is to be in the dissolution ratio. Dissolution ratio is generally written in the agreement, partnership deed. Okay. Or if dissolution ratio is not given, then what? Not equal ratio. PSR. PSR is not necessarily equal.
Okay, sir.
Step number 1, you are supposed to find out net worth. Are you clear?
Clear.
Step number 2, you allocate capital account balance to all 3 of them. Okay. Balance you will allocate to all of them in what ratio first? In case dissolution ratio is not there, then profit sharing ratio. Now, in this example, let's for simplicity assume dissolution ratio and PSR are equal. Is it clear? Then you will allocate the remaining 30 lakhs in what ratio? That is 10 lakh, 10 lakh, 10 lakh. Are you clear? And this is the value of Mr. X, value of Mr. Y, value of Mr. Z. Is it clear to all of you? Please tell me. This is how you are going to value the asset. Are you clear? This is how you are going to value the interest in firm LLP AOP BOI. What is the first step? Net worth of the firm. Second step, allocate the capital balance to all 3 of them. Then the balance amount will be allocated in the dissolution ratio, or if dissolution ratio is not there, in PSR. Are you clear?
Yes, sir.
And the last but not least, any other asset. Now, what is left out of all these things now? What is left? What can be any other asset? Tell me, Palani. First of all, see how to value, then we'll see what is left. Cost or NRV, whichever is higher. Okay, same. What can be any other asset?
Sir, debtors are there.
Debtors will be covered. Debtors are what? Debtors are asset or what? Debtor is something which you buy or what?
Stock.
Stock is something which you buy or what?
No.
You have a Rolls Royce. What? Alani, you are a very rich person, huh? You have a Rolls Royce in England.
Fine, sir.
Should you disclose that or not in India? I should disclose or not? Not disclosing. Cost or NRV, whichever is higher. Okay. Are you clear? Are you clear? Now, all these valuations were done as per what?
Number rule 3 sub rule 1.
Yes, keep this thing in mind. It is as per rule 3 sub rule 1. Circle it. Please. As per rule 3 sub rule 1. Is it clear?
Yes, sir.
Now there is a very specific situation which we are going to learn now. Before that, as per rule 3 sub rule 1, I would like to ask you all once again all the valuation. Okay, how will you value unquoted shares, equity shares? A plus B minus L, that formula. Okay. How will you value quoted shares and securities?
Cost of acquisition or
Cost or NRV, cost or average on 1st April.
selling price on value date.
Average on valuation date, whichever is higher. How will you value bullion?
Cost and NRV on valuation date.
Now see, what are you supposed to remember? Let me tell you. You are supposed to remember, mark this one. Point number 2. You are supposed to remember point number 3. And you are supposed to remember point number 6. And point number 7. Rest of the 4 are same only. Check. Can I say that?
Sir,
Tell me please.
sir.
Is it clear till here? Now last 1 or 2 points that I will discuss for today's session. Pay attention please, but very, 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 very important. Okay. See here. So are you 100% clear with rule 3 sub rule 1 now? Now I am talking about rule 3 sub rule 2. What does it cover? See now. Shall I say? Suppose you purchased bullion in previous year 10-11 4 rupees 10 lakhs. Okay. And you sold this bullion in previous year 18-19 4 rupees 18 lakhs. Okay. And this was what? Undisclosed asset. Okay. When did you purchase this?
10, 11.
10-11. When did you sell this?
Sold on 1880.
18-19. The AO did not come to know only about this transaction. Okay. Now, the AO came to know on 15th of June 2023. Okay. That something has happened like this earlier. Okay. Now, how will he value the asset? Tell me. How will he value the asset? How will he value? He is supposed to value on which date? 1st April 2023. Correct. But can I say the asset was transferred before the valuation date? I don't have the asset in front of me. How will I value then? Array, the valuation officer requires the value asset or not? To check the asset, to value an asset, the asset should be there in front of you or not? Now the asset is not there in front of me. Did you understand my question? So rule 3 sub rule 2 talks about, rule 3 sub rule 2 takes care of a situation. It takes care of a situation where the asset is transferred before what? Tell me. Before the valuation date. So if the asset is there on valuation date, if the asset is, then you value as per rule 3 sub rule 1. Cost or NRV, whichever is higher, or whatever is the valuation rules. But what if the asset is not there on the Valuation date. Then how will I value the asset? How will I value the asset in that case? Okay. So for that, rule 3 sub rule 2 has come. Check. Rule 3 sub rule 2. Asset other than, because bank account cannot be sold, na? Yes or no? Asset other than transferred before. Is it clear? Then you have to take cost or sale price, whichever is higher. Is it clear? So what will be your valuation over here? Tell me.
Cost is 10 lakhs.
Cost or this, whichever is higher. This will be 18 lakhs. Okay?
Yes, sir.
Take a photograph of this of rule 3 sub rule 2. So rule 3 sub rule 2 will apply when? When I don't have the asset on the valuation date. Okay? Now, see here. Suppose I purchased the bullion in 2010. For how much?
10 lakhs.
And I sold in previous year 18-19 for, say, 50,000 rupees. Is it inadequate consideration? Is it, am I selling it for inadequate consideration according to you?
Yes, sir.
Yes. Is it possible or not? You would have sold for inadequate consideration, or you would have given as a gift to someone. Yes? Inadequate or what? Without consideration. Is this possible or not? Please tell me.
Yes, sir.
So if you have sold something before the valuation date, for what? Inadequate consideration or no consideration. Then though you cannot take whichever is higher. Then the price will be, see, if the asset is transferred without what? Or what? Inadequate consideration. Then you have to take cost or FMV on the date of transfer, whichever is higher. Are you clear? So you have to find out the FMV in 1819. What was the FMV in 1819 of that particular bullion? Okay. So here you have to find out the FMV on transfer. Suppose the FMV on the date of transfer was 15 lakhs. Okay. So whichever is higher will come to 15 lakhs. Are you clear? Take a photograph of this. Clear? Now there is some mistake over here. First of all, just rectify that mistake and then we'll talk about that here. Just rectify this mistake the way I have done it over here. See on the board. You have to cut this and instead of that you have to write down this. Now this is a dangerous line. Dangerous line. To explain this, I will go to the textbook of ICI material so that I can get further clarity. Okay. So now what we have done just now is rule 3 sub rule 2. You can check on the board, please. See here. You can read these two paragraphs. The first two paragraphs, this one and this one. This one and this one you can read once if you want. Where an asset other than was transferred before the, then FMV of such asset shall be higher of the cost or sale price. Correct? Clear this one? However, where such asset was transferred without or for inadequate consideration before valuation date, the FMV of the asset shall be higher of its cost and the FMV on the date of transfer. Are you clear? Now, this next paragraph is a dangerous paragraph. Shall we read? Shall we read? Now, this is the last important thing in this chapter. After this, the chapter will be over in half an hour. Okay. So, it's a simple topic or not? So, once you address this properly, half an hour will be more than enough to complete the topic. That will complete tomorrow only, not today. It will be too much heavy on us. FMV in case where the new asset is acquired out of the consideration received on account of transfer of old asset or withdrawal from bank account. Now, this is the third rule, rule 3, sub rule 3. Check. Now, when is rule 3, sub rule 1 applicable? And when the asset, 8 category of assets are there, and when the asset is there on the valuation date, correct? If the asset is there on the valuation date, you have not sold before that, okay? Then you will apply rule 3 sub rule 1. Clear? When is rule 3 sub rule 2 applicable? When the asset is transferred before valuation date. Clear? Now what is rule 3 sub rule 3? Very dangerous. Let's read together. Let me give you some example also after that, okay? FMV. In case where a new asset is acquired out of consideration received on account of transfer of old asset. So you are buying a new asset from what? By selling the old asset or by withdrawing from bank account, okay? So how have you bought the new asset? For example, I bought this asset by selling an old asset, okay? Or by withdrawing from my bank account, okay? In such a case, the fair market value of what? Old asset or bank account, as the case may be, determined in accordance with rule 3.1 and 3.2. 3.1 when applicable, when it is there on valuation date. 3.2 when applicable, when it is not there on valuation date, shall be reduced by the amount of consideration invested in the new asset. Okay, now read it please once, and then we'll try to take an example. So, see, let me give you an example. It will take some time to understand this. Shall I? Now, there is an old asset. There is a bank account. Okay? Okay. Now, you sold this old asset. Okay? Say you sold this old asset for, say, let me give you one example properly. See here. Say in 2005, 2006, you purchased a building for 10 lakhs. Okay? Now, in 2010, 2011, you sold the building for 18 lakhs. Okay? Now, with the help of this building, this consideration, you purchase what? Say, I purchased a new building. Okay? Now, this is first building, this is second building. Okay? Suppose I purchase this new building for 30 lakh rupees. Okay?
Yes, sir.
Now previous year 23, 24 has come. Okay? Now AO noticed that you had purchased what? 2 buildings, right? Out of which one is sold, one is yet there with you. Okay, this is not sold. Okay, is it clear, Palani? Now see, shall I say?
Yes, sir. Yes, sir.
No. Is this chargeable to black money law?
Yes, sir. Undisclosed.
Yes, undisclosed. Is this also chargeable to black money law?
Yes, sir. Undisclosed.
Undisclosed. Now, how will I value this? As per rule 3.1 or 3.2?
3-2, sir.
3.2. As per rule 3.2, I will value this. Correct?
Yes, sir.
As per rule 3.2, what will be the value?
Cost or sale and structure cycle.
That will be 18 lakh rupees. Correct? Now, what does the law says that? This is old asset, right? What does the law says that? Now, I'll again ask you one more question. Is this clear till here? Now, will I be chargeable for black money law on this asset also?
Yes, sir.
How will I value rule 3.1 or 3.2? 3.1. This is new asset, correct?
Yes, sir.
Now, how will the new asset be valued? I have to find out the NRV also. Okay, suppose NRV on what? 1st April 2023, correct?
Yes, sir.
Suppose it is 50 lakhs. So, how much it will be valued?
50 lakhs.
50 lakhs. Is it clear? Now, listen carefully. Now, can I say this asset is purchased from sale consideration of this only. So have I purchased this asset from sale of this asset only? So now what the law says? Let's read. Shall I read? Read the first line. First of all, the heading. Shall we read? The fair market value in case where the new asset means second asset. Building 2 is acquired out of consideration received on account of transfer of old asset. Is it acquired from the transfer of building 1 or say from withdrawal of a bank account which is chargeable to tax earlier? Okay. In such a case, the fair market value of old asset. What is the fair market value of old asset in our example? 18 lakhs or the bank account as the case may be. As the determined in accordance with rule 3.1 or 3.2 shall be reduced by the amount invested in the new asset. So how much? This amount shall be reduced by the amount invested in the new asset. So how much amount we have invested in the new asset? Entire 18 lakhs. So therefore the value of this asset will become 0. Did you understand what I said? Otherwise it will lead to what? Duplication of tax. I have 1000 rupees, Palani. With the help of this 1000 rupees, I bought this phone. Okay. Okay. So I will pay tax on this 1000 rupees, correct? Now, if I sell this phone and I bought another phone, should I pay tax on both the phones then? It doesn't make sense, na? So, see, so same way, I sold an asset of 18 lakh rupees, correct? Am I investing in the new asset? Yes. Am I paying tax on the new asset? The consideration has come from the old asset only, correct? Therefore, since we are charging tax on new asset, the old asset value should be reduced by that much amount or not? Please tell me. Otherwise, if I buy an asset of 1000 rupees, say I bought this phone for 1 lakh rupees. Okay, this is undisclosed. Okay, now I sold this phone, I bought another phone, then I sold that phone, I bought another phone, then I sold that phone, I bought another. So every phone I will pay tax or what? It will be duplication and double taxation. Or is it clear or not? So what does the law say? The law says in a very simple manner. Okay, see here. The formula over here is very simple. The formula over here is as follows. Pay attention. FMV of what? Or the bank account on which you have paid tax. Okay. Is it possible that in your bank account there was 50 crore rupees? So you would have paid tax on 50 crore, correct? Now you withdraw that 50 crore and bought an asset of 80 crore. So will you pay tax on 80 crore and 50 crore both? Only on 80 crore. That 50 crore should be reduced or not, Palani? Is this 100% clear? So FMV of old asset and bank account shall be reduced by amount invested in. Is this 100% clear? And this will be taxable. Just write down this equation over there, please. Done? Now, are you ready for an example? Are you ready for an example? Let me see whether you are ready for an example or not. Tell me. Example is there. Very beautiful example. House A located in country outside India was bought in 1995 for how much?
15 lakhs.
It was sold in 2000 for how much? Will I be chargeable on this house?
Yes, sir. Undisclosed.
Undisclosed house. Correct. How much will be the chargeable income as per rule 3.1 or 3.2?
3.2.
3.2. What will be the value?
The value will be cost or state consideration. 20 lakhs.
22 lakhs will be the value. Okay.
Yes, sir.
Now this amount was deposited in the bank account. Where you have deposited? In the year 2001, another house was purchased for 35 lakhs. Okay.
Okay.
So you please tell me if this was the amount which is deposited in the bank account and you withdraw that money and you are using that. So are you buying a new asset from old asset consideration? Tell me please. So can I say the value of this first asset, house, will be 0?
House A will be 0, sir.
House A will be 0. Is it clear? Now let's talk about house B. You purchase house B for how much? 35 lakhs. The investment in house B was made through what?
Bank account.
Your voice is not coming. Made through withdrawal from bank account in the foreign country. House B has not been transferred before the valuation date. Okay. So how will the house B will be valued? 3-1. Okay. The valuation of house B was 48 lakhs. How much? 48 lakhs. Okay. Now, assuming that the value of foreign bank account computed as per rule 31E is 60 lakhs. Now, we need to find out the value of three things. Okay. There are three undisclosed assets which are there. House A, house B and bank account. Correct? First of all, house A. What is the value as per rule 31 of house A? Cost or NRV, whichever is higher, 22 lakhs. But are you using that money to invest in house B? How much you have invested? 35 lakhs. That's why as per rule 3.3. As per rule, house A will be 0. House A will be 0 or not? Correct?
Yes, sir.
Now let's talk about bank account. What is the value of bank account? 60 lakhs. Okay. Now are you withdrawing the money from bank account and buying the house? So is it justified to charge 60 lakhs and then new house both? So 60 lakhs minus how much? So 25 lakhs will be the bank account. Is it clear? Now what about the house B? Are you transferring the house B or it is there on valuation date? So it will be valued generally as per rule 3.1. Correct? Cost or NRV. What is the cost of house B? What is the NRV? Whichever is. Therefore the answer will be 48 lakhs. Is it clear? So house A value will be 0. Bank account value will be 25 lakhs and house B value will be 48 lakhs. Is it clear to everyone? I hope it is clear. Perfect. This same example will come in exam. Don't worry. Same. Copy paste. They have asked this example 3-4 times in paper 6, elective paper in old course. So they have taken this topic from elective paper only, na? Yes. So let us continue the discussion which we left in the last class. Pay attention, please, all of you. Black money law. So last lecture we have done few things like how to value the undisclosed foreign asset, right? Now, when you will value the foreign asset, see here, you will value in which currency? Tell me. You will value in INR, right? Because you want valuation in the Indian currency.
Yes, sir.
But the asset is located outside India, correct?
Yes, sir.
The valuation officer over there will value as per what? Will value as per?
Foreign currency.
Will value as per the foreign currency only, correct or not? Please tell me. INR is not possible. Therefore, how will you convert that into what? INR. So for that, for conversion of foreign currency into Indian currency, you will use RBI reference rate on valuation date. Which rate you will take? RBI reference rate on valuation date. And what is our valuation date? Our valuation date is 1st April, correct? Now, listen carefully, see here. Now, sometimes RBI reference rate is not available for all the countries. Suppose your asset is in Zimbabwe, or your asset is in Kenya, or your asset is in Uganda. Now, there is no direct RBI reference rate between Uganda currency and INR, or a Zimbabwe currency and INR, or a Kenya currency or an INR. There is no direct RBI reference rate. Then what will I do in that case? Then in that case, you will convert the Zimbabwe currency into US dollar first, and then you will convert the US dollar into INR as per RBI reference rate. Is it clear? Please tell me. Check. If RBI reference rate is not given, then the FMV of such asset shall convert in US dollar from foreign currency. Okay. So first you will convert in US dollar and thereafter the US dollar will be converted into what? Tell me. The INR by taking the RBI reference rate on the valuation date. Is it clear? After that, what is valuation date? I have already told you, correct? Say. And then there are certain definitions which are not very important for us in exam. We have seen some of them also in the last class, right? Yeah. Now let's come to section 4. Let's try to understand what section 4 is all about. Pay attention over here, please. Section 4 tells us the scope of undisclosed foreign income and asset, like in income tax. In income tax, do you remember that there is one section in income tax which defines the scope? Section 5 of income tax defines what? The scope. Similarly, section 4 of black money law defines what? Defines the scope. Scope tells you that what exactly is taxable in India. Okay. Like section 5 says what? Of income tax, that income has to accrue in India, income has to receive in India, income has to deem to accrue in India. Correct or not? And the assessee should be resident in India, right? That will come within the scope of Income Tax Act. Similarly, what will come in the scope of what? Black money law. What will come in the scope of black money law? Let's try to see that. The total undisclosed foreign income and asset of any previous year. Read the heading very carefully. Section 4. What is section 4? Scope of total undisclosed foreign income, point number 1, and asset, point number 2. As we all know, there are two things which are charged over here, correct or not? One is income, another is what? Asset. Correct? Now the total undisclosed foreign income and asset of any previous year would be what? It means the income from a source located outside India. You have an income from where? From a source outside India. Okay. And which has not been disclosed in the return of income filed under 139.1 or under 139.4 or under 139.5. Check. So, if an income is there outside India, okay? If outside India, say rental income is there outside India, and if you have disclosed that in ITR, disclose that in what? In either 139.1 or 139.4 or 139.5, then it cannot be called as undisclosed income. Are you clear? So, something which is not disclosed, a foreign income which is a foreign income which is not disclosed in the ITR, only that income will come in the scope of what? Black money law. Are you clear? The point I am trying to say is, if I am earning some income from Singapore today, okay, it cannot be directly charged in black money law. I have an option to disclose that where? Under the income tax law. If I do not disclose under the income tax law, then the question of black money law will arise. Are you clear or not? Is it clear?
Yes, sir.
Second point. The income from a source outside India in respect of which the return required to be filed under 139.1. Under 139, but no return or belated return or revised return is filed. So, what is the difference between this point and this point? The difference is very clear. In point number 1, you are filing the return. Check. In point number 1, you are filing the return, but you are not disclosing the income. In point number 2, you are not filing the return only. So, if you are not filing the return only, then obviously your foreign income is undisclosed or not? Please tell me. So, both the cases can be called as what? Undisclosed foreign income. Okay.
Yes, sir.
Now, what is undisclosed foreign asset? What is?
Undisclosed foreign asset.
Asset. The value of any undisclosed asset located outside India. Any asset which is located where? Outside India. If you have not disclosed that, you should have disclosed. If you have not disclosed that, that will be subject to what? Black money law. Is it clear? Please tell me. So this is what the scope of total income is all about. Now, two more things which we need to understand. See here. Suppose if some income, is it possible that your foreign income, see now, see here, is it possible that your undisclosed foreign income is already assessed to tax under the income tax law? Is it possible?
No, sir.
Why not possible?
Already, I didn't disclose how it is already assessed to tax.
Arey, you have not disclosed that. Okay. I'm not talking about whether you have disclosed or not. I'm talking about there is an income of 2017-18, for example, which was already got assessed in 1920. Okay. Okay. Now that income cannot get again assessed under what?
No, it already caught, now it cannot be assessed under.
That's what I'm saying. You have already caught under the income tax law and there has been a proceeding on you under the income tax law and the tax has been paid under the income tax law. Now can that same income be again charged under the black money law? The answer is no. Check please. Point number 1.
Already assessed to tax in Income Tax Act.
Now always remember it is at the discretion of the officer. It is always at the
Of the officer.
discretion of the officer which law he want to impose. If he wants to impose income tax law, can he impose or not for foreign income? Tell me.
Oh, yes, sir. Yes, sir.
Is there any provision under the income tax law that for foreign income you cannot assess tax? Is there anything like that? Tell me.
No, sir.
You have done the entire income tax law right now. Okay. So is there any provision under the entire income tax law which says that you cannot assess an income which is of foreign nature? Is it written somewhere? No. Array, in income tax law, the officer can charge your foreign income or not? He can charge now. He has both the options. He can charge under the income tax law or he can charge under the black money law. It is at his discretion. Okay. Now, whatever discretion he has exercised first, the doors of the second law will be closed. Correct or not? This is what these 2 points wants to tell you. Read it, please. Clear? Now, we have done a lot of provision with respect to yesterday that how to compute a undisclosed foreign income, correct? Sorry, undisclosed foreign asset, right? Today we are going to learn the most beautiful provision. What we are going to learn?
The most beautiful provision.
That how to compute undisclosed foreign income, okay? So it's so beautiful. See, section 5 tells us the computation. Shall I say? Computation of total undisclosed foreign income and asset. First of all, I am talking about undisclosed foreign income. Okay. Asset I have already told you yesterday. Yes?
Asset already 8 categories of asset.
Yes. How to value asset that we have seen yesterday. Now today we are going to learn how to compute income. Correct?
Yes, sir.
Expenditure, set off of loss not allowed. Check. Against undisclosed foreign income. No expenditure, no set off of loss, nothing is allowed. See such a beautiful provision. The computation is over in one line.
Oh, straight away income.
Direct. Whatever you have earned, that is your income. Okay?
Yes, sir.
No expenditure, no set off of loss, nothing is allowed. Correct?
Correct, sir.
Okay. Now listen carefully.
Yes, sir.
Now some relaxations. Listen. Some relaxations. Relaxation number 1. Very common sense relaxation. Point number 2. If any asset is acquired out of any income which is already assessed earlier under the Income Tax Act or black money law, then such income shall be reduced. See. In 15-16, previous year, you have earned 10 lakh rupees. Okay. Okay. Are reply?
Yes, sir.
You have earned 10 lakh and you have paid what? Tax on it. Okay.
10 lakh paid tax. Okay.
With the help of that, you have bought a building in Singapore. Now, this building is undisclosed. This building is
Undisclosed.
undisclosed. Now, on 15th of June 2023, the AO came to know. Will he charge tax on this? Black money law?
You came to know. Yes, sir. You charge black money law.
Now, how will he value this building? How will you value this building?
Sir, cost are
Suppose the cost of this building was 50 lakhs. How much?
50 lakh.
And the NRV is suppose 80 lakhs. Then how will be the value? What will be the value? The 80 lakhs will be the value. Correct?
Correct.
Now the law says that if you have bought any asset, if you have bought any out of an income which is already charged to tax, okay, under black money law or under the income tax law, okay, okay. So that much income has to be reduced from your value of asset. Therefore, your value of asset will be only how much? 70 lakh rupees. It's very simple and logical. I have earned 10 lakh rupees. With the help of that money, I have paid tax. Okay, on that 10 lakhs, listen carefully first of all the entire situation. Don't react in between. I have earned 10 lakh rupees. I have paid tax on that. Okay. Now, with the help of that money, I am buying an asset. And that asset is undisclosed. So, am I buying an asset from a disclosed income or not?
Yes, sir.
Am I buying an asset from a disclosed income or not, on which I have paid tax?
Yes, sir.
So, that much amount will be what?
Reduce
Reduce from your value of asset. See point number 2. That's what it wants to say. Write down this example above. First read point number 2. If any asset is acquired out of what? Any income which has already assessed earlier under the Income Tax Act before Black Money Law or Black Money Act, then such income shall be what? Tell me. Shall be reduced. Write down this example, please.
10 lakh is from income tax act or black money act or any.
That can be any law, na? Before 2015, it would have been Income Tax Act. After 2015, it will be Black Money Law. That depends upon when you have paid tax on that income. That 10 lakh rupees, that depends upon when you have paid tax on that. Before 2015, Black Money Law was not there only, na? So before 2015, it will be Income Tax Law only, na? If any assessment is done before 15, it would be done under which law?
Income tax law.
So that's what it wants to tell you, or kya? Correct or not?
Correct, sir.
Okay.
Done, sir.
So what has to be done over here? Tell me please. It's a very important point.
Income which was already disclosed or on which tax is paid, you have to be
Now
reduced.
this provision is a hopeless provision. This is a
Hopeless push.
hopeless provision in some circumstances. See here on the board. Check here. See. Shall I say? Suppose you earned 1 lakh rupees in 1990, 1991. Okay.
Okay, sir.
Now with the help of that, you bought a land. Okay.
Okay. Uh,
Is it clear?
I bought a land.
I bought a land of say 3 lakh rupees. Okay.
I bought a land. 3 lakh.
Okay. From this money, I bought a land of 3 lakh and some money I put from my pocket. Okay.
Clear, sir.
Now this land is undisclosed. This land is
Land is
on this is disclosed. This income you have paid tax. Okay. Is it clear?
clear.
Now, suppose in previous year 23-24, AO catches me. AO catches me, right?
Yes.
Then how will he value my asset? Tell me.
Cost or NRV, which
Cost or NRV. Suppose the NRV today is 50 lakh rupees. How much?
50 lakh rupees.
Therefore, value will come to how much?
50 lakh rupees.
50 lakh rupees. Now it's a joke. What is the joke? That from 50 lakh rupees, you can reduce 1 lakh rupees. Yes or no?
Yes, sir. I can read it.
Yes, you can reduce now 1 lakh.
Yeah.
Because to buy this asset, I am using the income which was disclosed earlier. Correct?
Correct, sir. Correct, sir.
Now, is it a joke or not that you are comparing the income of 1990 with value of 23-24? Yes?
Yes, sir.
It is wrong or not? Tell me please.
Wrong. Yes, sir.
You cannot compare the income of 1990 with value of 2023-24, right? So that is the reason the government has given you some relaxation now. Okay. In continuation of point number 2, in case of an immovable property, the following amount shall be reduced. So for property, how much will be reduced? This amount will be reduced and not 1 lakh rupees. Okay. Now what is this amount? FMV of the asset. What is the FMV of the asset in this case? 50 lakhs. What is the income disclosed earlier?
1 lakh.
1 lakh divided by what is the total cost of the asset?
3 lakh.
3 lakh. Therefore, this is coming to 1/3. Correct? 16.67 lakhs will be reduced from your total income. Did you understand what I did?
Understood, sir. I am giving indexation.
A kind of indexation, yes, you can say. So instead of 1 lakh, you will reduce how much? Tell me.
0.67.
16.67 lakhs. You can go through this example now. A house property located in country outside India was acquired by Mr. A in the previous year for 60 lakhs. For how much he has purchased?
50 lakhs, sir.
Now, out of the investment of 60 lakhs, 35 lakh was assessed to tax. Okay. So, you are buying the asset from where? From your assessed income. Correct? Now, the value of that asset today is 120 lakhs. Okay. So, will you reduce directly from 120 lakhs, 35 lakhs? Tell me. No, you will reduce by this formula. See on the board. What is the FMV of the asset?
120 lakhs.
120 lakhs. What is the income disclosed?
35 lakhs.
Divided by what is the cost of the asset? 60 lakhs.
60 lakhs.
This will come to 70 lakhs. Okay.
Yes, sir.
Now this much will be reduced from your cost of asset. Can you see this? 120 minus 70 lakhs. Therefore 50 lakhs is your what? Value of undisclosed asset. Is it clear to all of you? So this is how you are going to value your asset. Check please. Now this benefit is only given for one asset. Which is that one asset?
Only for immovable property.
Unfortunately, this should have been given for other assets also.
Yes, sir.
This should have been given for jewelry also, right? Jewelry also increases with time or not? This should have been given for shares also. Shares also increases with time, correct?
Correct.
So they have not given all these things, okay? What can we do? Nothing can be done. Shall I go ahead? Now let's come to the penal provision of black money law. See here, now you have to see here continuously. Shall I say? Now what are the penalty imposed under the black money law? That I am saying one by one. You have to be active with me. You have to be listening to me carefully now. First of all, section 41, where the tax has been computed in relation to undisclosed foreign income and asset. So has the tax computed on your income and asset? Tell me. Flat 30%. Now you have to pay 3 times penalty of that. Check. 300% penalty. How much penalty? 300% penalty. In income tax, maximum penalty is how much? 200%. Correct?
Yes, sir.
Here, first you have to pay 300% penalty on your tax. Okay.
Yes, sir.
Next penalty. Failure to furnish return. What are you not doing?
I'm not furnishing the income tax return.
So 10 lakh rupees penalty. Check. So if you fail to furnish what?
Income tax return.
Obviously, you should have a foreign income or foreign asset. Otherwise not. Right or not? You should have a foreign income or foreign asset, and if you fail to furnish return, 10 lakh penalty. Correct?
Correct, sir.
Next, you are furnishing return, but you are not furnishing information in the return properly. Check. You are not disclosing the asset, you are not disclosing the income. Are you clear?
Yes, sir.
Then also 10 lakh rupees penalty. Check. Very dangerous provision, huh? Very dangerous. The penal provisions are very dangerous. Shall I go ahead?
Sir.
Now pay attention, please. See here. Are you supposed to also disclose a foreign bank account? Are you supposed to disclose a foreign bank account? Yes, but there is a relaxation over here. Shall I say? Section 42 and 43 penalty will not be imposed. Okay. It means these two penalties will not be imposed. If your bank balance, aggregate bank balance does not exceed 5 lakh rupees at any time during the previous year. Check. So if you have a foreign bank account, okay, and the balance in that bank account does not exceed how much? 5 lakhs at any time during the previous year. It is less than 5 lakhs every time. Okay. All the time it is less than 5 lakh or up to 5 lakhs. Then if you don't furnish the information or if you don't furnish the return, it's okay. You will not be liable for these two penalties. Is it clear?
Clear, sir.
Now, the foreign bank account will be in which currency? Foreign currency. Correct?
Correct.
So to convert that into rupees, you have to use the TTBR on the valuation date, on the date on which you wish to value. Check.
RB reference rate. Okay.
No, not RBI reference rate. Here RBI reference rate will not be taken.
Yes.
RBI reference rate will be taken to value your asset. Okay. To value your asset, you will take RBI reference rate. But to value your bank account here, you are going to take what? The TTBR. Are you clear?
Yes, sir.
So which all penalties you have learned so far? Please tell me.
Into undisclosed income, 3 times the penalty.
Three times the tax.
Tax.
3 times the tax you have to pay penalty on your undisclosed income and asset. Okay. 3 times the tax penalty has to be paid. Second one,
Sir, I failed to furnish return 10 lakh.
you are failing to furnish the return. Okay.
Third,
You are furnishing not, you are failing to furnish the information in the return. Correct?
or giving wrong information.
Now, this 10 lakh rupees penalty will not be imposed you if you have a foreign bank account and the aggregate balance does not exceed how much?
5 lakhs at any time.
At any time during the previous. Next. Section 44. What is this penalty? Default in payment of tax arrear. Suppose the department is sending you notice. Department is,
Sending me notice.
and you are not paying the tax. You are,
Not paying the tax.
then you will be liable for a penalty equivalent to tax in arrears. Check. It is there now under income tax law also. If you are assessed in default, they are sending you notice and you are not paying the tax within 30 days. Do you remember? Then you are liable for penalty under section 221. 156 is the notice of demand. Section 220 to 226 you have to bear the consequences. Remember?
Yes, sir.
In that 220 is interest, 221 is penalty. Remember?
Sir, yes, sir.
So you'll be liable for that. Okay.
Sir.
Shall I go ahead?
Yes, sir.
So what is this section 44?
Sir, the department sends notice, I don't pay the tax.
Department is sending you notice, giving you 30 days time. Here also they give you 30 days time. How much time? 30 days. If you don't pay within 30 days, you have to pay a penalty equivalent to tax. Okay.
Clear, sir.
Next one. If you fail to answer any question, if you
Fail to answer any question,
or sign any statement or
sign any statement,
attend or produce any books of accounts or documents in response to a summon, Okay. So if you are not answering the question of the department, if you are not signing any statement given by the department, if you are not attending or producing the books of accounts in response to a summon, here also summon is issued. Just like section 131, just like with section 131 of income tax, here also summon is issued. Then you may be liable for a penalty from the range of 50,000 to 2 lakh rupees. Check. How much penalty? Minimum 50,000, maximum 2 lakh rupees. Is it clear?
Yes, sir.
Now, before imposing penalty, okay, the officer has to take approval of joint commissioner and joint director. Okay.
Yes, sir.
Now, if the ITO wants to impose penalty, who wants to impose penalty? And if he wants to impose a penalty of greater than 1 lakh rupees, greater than how much? If the ITO wants to impose penalty of greater than 1 lakh, who is ITO? Income tax officer. Sir, the authority over here is same or different? The authority is same only. Let me tell you. There is no separate black money authority. Okay. The income tax department will take care of the black money issues also. Are you clear?
Yes, sir.
There is no separate authority under the black money law. So, if the ITO wants to impose a penalty of more than 1 lakh rupees, then the ITO has to take an approval from joint commissioner and joint director. Is it clear? And if the AC, DC, additional director, deputy director wants to impose what?
ACDC, additional director, deputy director wants to impose
Penalty of greater than 5 lakh rupees. Penalty of greater than what?
5 lakh rupees.
Then it has to take an approval from joint commissioner and joint director. Is it clear? Now, last few things, let me see. Now we are going to talk about prosecution. What?
Prosecution.
Now, the first thing, willful failure to furnish return. If you fail to furnish return, there will be a prosecution. Rigorous imprisonment of minimum 6 months, maximum 7 years plus fine. Check. So, if you fail to file the return, then 10 lakh penalty also and 6 months to 7 year jail also. And separate fine also.
Okay, sir.
Is it clear?
Yes, sir.
Now, willful failure to furnish information in the return. What? You are filing the return, but you are not giving the proper information in the return. Again, 6 months to 7 years, fine, rigorous imprisonment. Clear? Next, willful attempt to evade any tax. If you are evading any tax, penalty, interest, chargeable under the act. Okay. Then again, rigorous imprisonment, 3 years to 10 years, fine. Now, this is the major reason why you would not like to come to what? Black money law. Okay, this is now treated like a criminal law. Which law?
Yes, sir.
Correct or not?
Correct, sir.
Check. Willful attempt to evade payment of any tax. Penalty, interest under the act by any person. Rigorous imprisonment 3 months to 3 years. Fine at the discretion of the court. The court will decide the fine. Okay. Okay.
So, what is the difference between the
Yes, there is a difference between willful attempt to evade any tax. Here, you are evading the tax. Means you have not paid you have not shown the income only. Okay.
Yes, sir.
So that is evading tax. Here, assessment is done on you. Department has sent you the notice. Okay. They have asked you the tax payment, but you are not paying the tax. Did you understand the difference between these two?
Yes, sir. Yes, sir.
One is you have not shown the income only, and then the department has caught you. Okay. Second one, you have not shown the income, department has caught you, they have done the assessment on you, they have sent the notice, now you are not paying the tax. Okay.
Yes, sir.
So these two are very slightly different from each other. Next, you are making false statement. What you are making? The department is asking you some question, you are giving wrong information. Okay. Yes or no?
Yes, sir.
Rigorous imprisonment 6 months to 7 years. Okay. Next one, abating or inducing a person to deliver a false statement, account declaration or commit an offense. Abating means you are forcing someone to do something wrong. Okay. Like I am a chartered accountant. I am telling my client, "Arey, don't show income, I will take care of it." Don't show such kind of overconfidence in life. Okay. The department will catch you. They will put you for 6 months to 7 years along with your client also. Now then both of them sit together in the jail and decide what to do. Okay. Now, if you are found doing all these things, that is, if you are found under black money law, if you are
Found doing the all these in black money.
no. If you are found doing black money law, if you are found under the black money law for the second and subsequent offense, then rigorous imprisonment. First time, it's okay. Second time, you will be liable for separate rigorous imprisonment and separate penalty. Check. 5 lakh to 1 crore rupees. At one time, they will excuse you now. Limit for fine is 5 lakh to 1 crore rupees.
All the four cases, there's no limit for fine, sir.
No. So these are some of the dangerous provisions of what? Black money law. Now obviously they have not put the entire black money law. They have only put what? The extract of black money law. They have not put the entire chapter in your syllabus. Okay. In all there are more than 90 sections in this chapter. How many?
90 sections in this chapter, in this act.
Yes, in this act. But they have only put some of them in your syllabus. Now let's do some of the questions of black money law today. Okay. Come to page number 36.1, all of you. Shall we read? I want you to read first and get the answer for me. Have you read? Tell me.
Read the question, sir. I have read the question.
What is the answer? Is the notice valid or invalid?
The notice is valid, sir.
Why it is valid?
Whether the person was a non-resident or not is not the case, sir. He have found the undisclosed foreign residence, sir.
No, that is not the question. The question is on the definition of assassin. What is the definition of assassin under black money law? See, the definition of assassin under black money law is he should be resident in India. Correct? The second definition is if he is non-resident today, but if he was ordinary resident in the year in which he has purchased the property, then also he is assassin. Remember that is the definition of. Are yaar, in one day you forget yaar, Palani. How will you remember till exam yaar? Check this.
Remember that, sir.
Now, when has the assassin purchased this asset?
Purchase 1314, sir.
In 1314, was he resident in India? Ordinary resident? He was an ordinary resident, in fact, because before that, since 2008, he was in India only. Check. Now, since 2008, if he was in India, obviously he was ordinary in 2013-14, correct or not? Tell me loudly. Therefore, what is happening in this question? Ravindra is an Indian citizen, left India in 2016. He has never left India previously since 2008. It means between 2008 to 2016, he was where? Tell me. He was in India, right? And during this period, he has bought this property outside India and Malaysia. Check. So that time he was resident or not? Yes. Therefore, he will be what? Called as an assessee, and the department can send the notice to him. Yes or no? Are you clear? Tell me loudly, are you clear?
Sir, notice can only be sent to assessee, sir. No one else we can send notice.
No. Is this clear? Is this notice valid or not? Because Ravinder is no doubt today non-resident, correct? But the year in which he purchased the asset, at that time he was resident and therefore he will be liable for black money law in this country. Okay. Now second question is based on what we have done yesterday or I guess today. Read please. This is something which we have done just now today itself. Done? Now what is happening in this case? Mr. Harshit stayed in India for only 48 days during 23-24. So 23-24, what is his residential status? Non-resident, but it doesn't matter. When he purchased a property in country A for 80 lakhs, was he resident in that year?
He was a resident, sir.
He was a resident. Therefore, can he be called as an assessee? Please tell me. Yes. Whether black money law can be imposed on him or not. Please tell me. Now, he purchased the asset for 80 lakhs. Correct? Now, out of this 80 lakh, he has purchased, he has used the income of 55 lakh, which was assessed to tax in that year. Okay? So, he has paid tax on this 55 lakhs. Correct or not? Therefore, what is the value of the asset today? 120 lakhs. Now 120 lakhs will be reduced by what? Some amount. Correct or not? How much is that some amount? Can I directly reduce 55 lakhs?
No, sir, we have to give the benefit of index.
We have to give the benefit of increasing in the value. So 120 into 55 divided by 80. Correct?
Yes, sir.
So this is what it is done over here. Check it please. It is the same question which we have done just now. Yaar. Numbers are changing.
Yes, sir.
Numbers are changing. That's it. Is it clear?
Yes, sir.
Now, shall I go ahead? Such kind of easy questions are going to come in exam. Don't worry. It's a very, very chindi topic. Question number 3, read. This also we have done yesterday. Yes? Same example. Remember or not? Are you clear? Are you done? Are you done? Now, an apartment was located in country X, was bought in 1988 for 10 lakhs. So this was the cost, correct? And it was sold in 2003 for 30 lakhs. Okay. So which rule you will apply?
30 lakhs.
Are rule 3.1 or rule 3.2?
Sir, this is rule 3.2 before the
3.2. Rule 3.2 you will apply. See on the board. And the value will be 30 lakhs, correct? Now have you used that value to purchase a new asset? So that will be reduced and this will become 0, correct? Correct or not? Now, don't think much. They are only asking you what would be the fair market value of new apartment. So only answer that much. Don't answer unnecessary things. Tell me. The fair market value of the new apartment will be 55 lakhs. Okay?
Yes, sir.
Or what? The cost. What was the cost of the new apartment?
40 lakhs.
45 lakhs. This is the FMV on valuation date, correct?
Correct, sir.
And this is the cost, whichever is higher. This is as per which rule? 3.1, because the asset is not transferred before valuation date, correct? So that's it. That is the answer, 55 lakhs. It is as simple as that. A very simple one. MCQs can come from this in the examination. Be careful. Is it clear? We have done a similar question yesterday. I can show you. Which one? This one. See this one. Remember? Correct. Third question. Third question, see please. Red or what?
Sir.
Question is red. Answer. What is the status of the answer then? Answer will not be red or what? Answer will not be thought or what?
Sir, answer also done, sir.
Answer also done. Now, let us try to analyze this question. Mr. Pilu, aged 72 years, was a managing director. He retired in June 2009 and left India permanently in Jan 2012. Okay. So 2012 is the year in which he left India. Correct. Now the joint director noticed in 2023 June that Mr. Pilu had accumulated assets since 2008-9. What is the asset? Residential apartment and deposits in bank. Okay. Which were not disclosed for tax purpose. So he was served a notice under black money law in August 23. Okay. So now, is Mr. Pilu an assessee as per black money law? First of all, tell me that. He is an assessee. He is non-resident today. But the year in which he has undisclosed asset, was he resident in that year? Was he resident in 9-10, 8-9? Please tell me. Yes, he was resident in 8-9 because he was in India in that time. So therefore he is assessee. So he cannot make an argument that he is not an assessee. Second argument which he is making, that he is saying that 10 years have elapsed. Now the concept of 10 years have elapsed are applicable under the income tax law. Yes or no? In income tax you cannot issue notice beyond 10 years now. Right? Right? But in black money law, is there any time limit? Have you seen any time limit that you cannot send notice after 10 years, 15 years, 20 years? Tell me please. There is no time limit. Therefore, his argument is of no use. Tell him to pay tax. Discuss the liability of Mr. Pilu under the black money law. Yes, Mr. Pilu is liable for tax under the black money law. Correct? State the procedure. The procedure is what? He has residential apartment. For residential apartment, you have to consider the cost or NRV, whichever is higher. Correct?
Yes, sir.
And for deposit in bank account, you have to consider all the deposits from the date of opening. Correct?
Yes, sir.
So that's it. We have to write down all those things over here in detail. Okay.
Yes,
He'll be liable for 30% tax. He'll be liable for penalty also. Correct? Of 3 times. Correct?
penalty, imprisonment, fine.
Penalty of 3 times he will be liable. Correct? This is how you are going to value the asset for residential property like this, for bank account like this. Is it clear? So simple questions are there, Palani. And same they will ask in exam. Don't worry. Okay. One last question over here. Question number 5. Please go through it. Have you read? Got the answer? Now see please. Now this person is an Indian citizen and he has settled in California in 2015. Prior to that, he was in India only. Okay. Now in 2009, he has purchased a property in California. At that time, he was what? He was resident in India. Correct? And when he opened this bank account, at that time also, he was what? Tell me. Yes or no? He was resident in India. Now, he should have disclosed this asset. Correct? But he has not disclosed. Yes? So how will he value? How will we value the property now? Cost is $20,000. Compare with fair market value on which date? Tell me. 1/4/23 because that is the year in which the AO has seen that. It has come to the notice of the AO. Correct? So therefore, whichever is higher comes to how much? And you will come multiply that with 71 rupees. Correct? RBI reference rate on 1/4/2023. Correct? So the first one is done. Is it clear? $25,000 into 71. Correct? Now, how to value the bank account? What is the sum of all deposit? All deposit. Tell me. Or it is 10,000 rupees only. $10,000 only. Check. That is the only thing you have deposited in your New York bank account. Apart from that, you have not deposited anything else. Check. Sir, what about this accrued interest? Accrued interest is not a deposit now. Is it a deposit? Tell me. It's not a deposit. So this is only the amount of deposit. $10,000 into 71. Okay. That's it. Don't take accrued interest. Accrued interest will not come in the definition of what? Tell me. Deposit. Therefore, this will be 7,10,000. This is your total value. Is it clear?